Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Here's a look at the headlines. The Nikkei starts more than 1% higher after Wall Street posted its fourth straight day of gains. A lower than expected US stockpile sends crude prices higher. Brent and WTI prices gain more than 2% on Wednesday. Jeweler Nirav Modi seeks some time from lenders, says that he can raise 6,000 crore rupees by selling his brand Firestar Diamonds to repay his loans. And Jacob Zuma steps down as South Africa's president after 9 years, says he doesn't want to be the reason for the split in his party. Let's turn to international markets now, and US stocks rose sharply on Wednesday, notching a 4-day winning streak as banks and tech companies carried major indices higher. They rose despite a jump in bond yields. Bloomberg's Abigail Doolittle has this report on all the action from Wall Street.
The bulls were out in Wednesday's Wall Street session. The Dow, S&P 500, the Nasdaq all finished higher by more than 1%. The tech-heavy Nasdaq up nearly 2% on the day. Right now on Wednesday, on pace for its best week since July of 2015. So the rebound rally from the 2 weeks of intense selling pressure continues. The major averages up for a fourth day in a row. All of this despite a hotter than expected CPI print and inflation reading coming in higher than what had been expected. Now that was a concern going into that data point coming out earlier in the day. But investors just seem to be absorbing it, no longer worried by rising rates, at least on the day. Volatility is certainly back, so sentiment could change very quickly. Now, relative to the sector composition, most sectors for the S&P 500 higher, led by the financials, tech, and consumer discretionary. A few standout winners. One of the big movers on the day truly was Chipotle Mexican Grill, up more than 15% on the announcement the company has brought in a new CEO from Taco Bell. We also had the shares of Fossil Group soaring at one point up more than 90%. Its best day on record since trading action started back in 1993 after the watch and accessory company beat comp sales estimates. It looks like a turnaround could be in place there. We also had the gold miners trading sharply higher, up 4 or 5%. The likes of Barrick Gold, Gold Corp, Newmont Mining. This as gold rallied. Gold and silver both up 1% in response to that inflation reading that again came in higher than expected. Often those precious metals are seen as a bit of a hedge. So overall, Wednesday's Wall Street session had a bit of a risk-on tone, and the rebound rally from the selling seems to be continuing, at least now. In New York, Abigail Doolittle, Bloomberg News.
And speaking about that inflation reading, which was perhaps the most watched in recent times, US consumer price inflation exceeded projections in January. A rise in apparel costs essentially prompted the spike in inflation. Excluding volatile food and energy, the so-called core gauge increased 0.3%, also above forecasts of 0.2%. It was up 1.8% from a year earlier, higher than the projection of 1.7%. But a separate report on retail sales calmed the equity markets. That's essentially the reaction that you saw later. And US retail sales, the one that I'm talking about, unexpectedly fell in January by 0.3%, and December figures were revised downwards, suggesting that consumer spending is on a slower track in the first quarter. But let's take a look at the Asian markets now, and they've opened strongly, at least the early risers have. There are several markets in Asia that are closed the remainder of this, or rather today, and Chinese markets are going to be closed till Wednesday for the Lunar New Year holiday. Let's go straight to Bloomberg's Rosalind Chin for all the live updates there for the markets that are open, of course. Rosalind?
Yes, you're right. We're looking at reduced volumes and also liquidity as well because of some of the closures starting today. So we've got China shut, we've got South Korea shut as well. Taiwan is also closed, Vietnam, and also we're looking at a half day of trade in Hong Kong today as we look. This is the Lunar New Year's Eve. So we're looking really at the markets which are open. For example, Japan, one of the big ones, and one of the big focuses today for us is the yen, because that has been just steadily marching higher. It bust through another key support level earlier this morning, gaining for a fourth day, touched 106.55, which is basically the lowest since November 2016, and now it's trading at 106.5. Oh, it is trading at 106.55 right now. So really holding on to those gains. Now, of course, yesterday we saw that the higher yen did have some impact on the markets. They were trading lower yesterday. Today we're seeing that the markets are actually pulling higher. We've got the Nikkei up by 1.5%, the Topix up by 1.2% this hour. In Hong Kong right now, the Hang Seng is gaining 1.3%. In Hong Kong, really, we're looking at information technology and energy stocks as well. Among the biggest gainers there, those sectors. And in Sydney, the S&P ASX 200 index making gains of about 0.8% right now. BHP Billiton, Rio Tinto among the biggest gainers. So you see resources stocks there are performing fairly strongly. But yes, that CPI data on Wednesday didn't give the markets the jolt that many investors had actually been expecting, been watching for. I guess the next question really is, what will affect the markets? What is going to be the next shock factor for the markets? And that actually has a lot of analysts scratching their heads. And that's something that we'll be watching for. Back to you.
Well, analysts are scratching their heads, and so are we, certain times this last month or so. Thanks so much for that, Rosalind. But let's turn to the Indian market now, and Darshan Mehta and Agam Vakil are here, as usual, to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, first to you. Crude oil in focus today again.
Yeah, so commodities did well overnight. Equities did well overnight. So if you're looking at most of the Asian indices, they're doing well. The Japanese market is up almost over 1.5%, and that is what's been reflected on the SGX Nifty. It's trading up almost 85 points at this currently, indicating a gap up opening. But again, the issues of the banks still remain. So it'll be interesting to see how the bank Nifty opens in trade. As far as the ADRs are concerned, a very strong closing by most of the ADRs. Counters like Vedanta and Tata Motors gained almost 2.5%. Wipro, Dr. Reddy's also gaining in trade. So apart from it, ICICI was flat in trade, but overall all the ADRs ended with a positive bias. Now the big news was the big surge that happened in crude overnight. 2.5% surge on the WTI and the Brent. Even in today's trade, it's trading up almost 0.5%. So we are seeing that, again above the $60 barrel per mark. So the WTI is above the $60 barrel per mark, and the NYMEX or the Brent, the Brent is coming close to the $65 barrel per mark. If you're looking at what happened with the base metals on the LME, all of them ended with strong gains. You have copper, which was up 2.5%, zinc, which was up 2.8%, nickel surged almost 5%. So strong start by the base metals and close by the base metals on the LME. And the start in China has been good. COMEX copper is trading higher. You have on the Chinese market, you have copper, which is up almost 1.3%, zinc, which is up 1.7%, and steel, which is up 0.5%. What's not doing well is aluminium, which is trading down by almost 0.8%. Even gold seems to be having a good run. It's trading up, silver is trading up, and all the precious metals are doing well in today's trade. What happened as far as the fund flows were concerned yesterday? A big selling number came in both on the FI and DI front. So 728 crores of net selling by FIs, and DI sold in 150 crores. So overall, FIs in this month have sold in almost close to 6,000 crores, and DIs have bought in almost 6,600 crores. So net, we are still up 600 crores on the fund flow side. As far as the Nifty was concerned, the Nifty was down almost 0.3%. Surprisingly, the mid caps was flat in trade, and there was selling pressure that was seen on the small cap index. But the big selling came in on the Nifty Bank and the Nifty PSU Bank. The Nifty Bank was down 1.4%. It was saved certainly because of some private banks which managed to outperform, but huge selling on the Nifty PSU banks. It was down almost 5%, led by the fraud that happened as far as on PNB is concerned. Now the Nifty was down 38 points. What contributed on the negative side? ICICI Bank, SBI and Axis Bank, they were down in trade. Overall, if you're looking at it, Reliance, Bharti Airtel and HDFC Bank managed to move in higher this time around. So the Nifty was down almost 39 points, but Agam is here. Agam, what are the FNOQs indicating?
Well, Darshan, we've seen the Nifty hold on to 10,500 and that could be considered as a positive, at least as far as those who are longs in the markets are concerned, because that is the crucial as well as the technical as well as the psychological mark. That said, we really didn't see too much in terms of changes in open interest for the Nifty Bank. However, we have seen about a 13% increase increase. This is towards fresh shorts in OI yesterday. What happened to the VIX was another decline of around nearly 4%, now at around 17. And when it comes to the put call ratio, again, very little change, standing at around 1.08 as against 1.1. In terms of the way we've seen changes in open interest, considering the fact that we saw the Nifty move downwards only in the last couple of hours of trade, we saw a little more writing around 10,600 call. Otherwise, it was largely flattish. But in the F&O stocks, we're keeping an eye on Oriental Bank as well as Repco Home Finance, which have seen substantial movement, and of course PNB and Bank of India. These are not in F&O, mind you. These are actually stocks which have seen a substantial increase in open interest. So these are some of the stocks that we will be watching out for as we move into today's day of trade.
Thanks so much for that, Agam. Let's turn now to the rupee and the bond market, and Saloni Dhanuka is here to tell you all about those two. Morning, Saloni. Big moves to be expected and also to talk about.
Absolutely, Alex. So speaking of both bond and rupee, it gained yesterday on the back of better than expected key macroeconomic data. In terms of rupee, it extended gains for the second consecutive day, and it ended 23 paise higher at 64.09 levels against the dollar. Now the home currency ended 0.4% higher against the dollar, the most in 2 months. Speaking of bond, sovereign bonds dropped yesterday as yields on the new 10-year bond ended steady at 7.49%. On the global front, dollar index ended lower for third consecutive day despite better than expected US CPI data. Now the consumer price inflation came in higher at 0.5% in January versus a forecast of 0.3% rise in Jan, according to a Bloomberg poll. While the dollar initially gained on this news, however, reversed all the gains to trade lower against all of its G10 peers by the trade end. The dollar index is now trading below the crucial 89 mark in the early Asian hours. Well, speaking of other currencies, dollar extended losses versus yen, and it touched a fresh 15-month high of 106.72 levels against the dollar. While speaking of euro and pound, they both advanced almost 1% against the greenback. While coming back home, dollar rupee is trading at 64.04 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. Let's shift focus now to the commodity space, and we've already broached a few of those commodities, and particularly oil, and that's what we're going to start with. Of course, talking to Jayesh Khilnani. Jayesh, I think obviously the key trigger there is the US stockpiles, and that's the first thing we're talking about.
Morning, Alex. That's right. So in fact, oil prices posted their best gains in this year so far. So WTI and Brent both surged more than 2.5% each overnight on the back of positive inventory data. Now the inventory data came in much lower than what we were anticipating. We were anticipating crude oil inventory buildup of nearly 4 million barrels and gasoline inventory to climb as much as 4.5 million barrels. What exactly came in was EI reported the crude inventory gain of 1.8 million barrels for last week. That was better than expected. And also the gasoline inventory that came in at about 3.6 million barrels for last week, once again better than expected, and that was the primary trigger for oil prices going up. As far as gold prices are concerned, we are seeing positive bias for gold prices. COMEX gold in fact has surged above the 1350 mark for an ounce, and it gained most in about 11 months or so. The primary trigger over here and for the base metals is the dollar index, which has been trading for the lower for the fourth consecutive session. That also aided the growth in base metals, and the index itself climbed about 2.5% on London Metal Exchange, which is the most since January 24th last month. Now US equities and the dollar index played a hand at the surge in the base metals. As far as individual base metals are concerned, nickel was up about 5%, which was the best performer. Zinc and copper was up more than 2.5%. Aluminium was up nearly 2%, and lead and tin closed marginally higher. Now we can see similar cues coming in from the Shanghai Futures Exchange, except for aluminium, which has opened lower in trade.
Thanks for that, Jayesh. Let's move on to the big story now. And Punjab National Bank is at the center of one of the largest frauds to be detected across the Indian banking sector. PNB said that it has detected some fraudulent and unauthorized transactions at one of its branches in Mumbai. Based on these transactions, other banks appear to have advanced money to customers overseas. Now, the quantum of these transactions is estimated at $1.8 billion. That's about 11,400 crore rupees. Now, according to an exchange filing by the bank, the fraudulent transactions are, not yet. It was initially estimated was less, and finally it was estimated at nearly 11,400 crores. The transactions are allegedly linked to a designer and jeweler Nirav Modi, against whom a complaint has been filed with the Central Bureau of Investigation. Vishwanath Nair explains the manner in which the perpetration allegedly happened.
This is essentially the modus operandi of how exactly these transactions went through. The first part of the transaction involves these borrowers who are Nirav Modi and some associated parties, them going to the Brady House branch in Mumbai of Punjab National Bank and seeking a letter of undertaking. The letter of undertaking is essentially a promise that Punjab National Bank gives to some of the foreign lenders, saying that this is a good borrower. In case this borrower defaults, we will pay you back. Once they've received that LOU, the foreign bank will approve buyer's credit. This is essentially the money that a company takes so that they can buy raw materials and then start creating their product. So once they have approved that buyer's credit, the amount gets credited to the PNB Nostro account. So remember, the money does not actually reach any of these borrowers. It essentially remains in this Nostro account and then gets paid out to the supplier, whoever is supplying these raw materials to the company. And then once the supplier gets it and the raw materials are transferred, the person who's borrowing all this money will finish their product. They will export these products. They will get whatever their receivables are from these exports, and then they will pay back the foreign bankers. Essentially, the difference is that you get money from a foreign banker, then you pay them back using the export receivables, and then you clear the transaction. The problem here is, and the whole fraud here is, that when they receive these LOUs, they did not have necessary documents or necessary sanction of credit. What has come out of the FIR is that the companies tried to get these loans but did not have any sanction limit from the bank. Neither did they have any kind of deposit or long-standing relationship with the bank, which are both required whenever they want to get any LOUs.
And Banking Secretary Rajiv Kumar confirmed that the transactions relate to designer Nirav Modi and Gitanjali Gems. Speaking to Bloomberg Quint's Nikunj Ori, he also said that 2 fraud letters of undertaking were issued by a PNB branch manager in Mumbai. Nikunj Ori gets all the details in this report.
According to Banking Secretary Mr. Rajiv Kumar, the PNB case dates back to 2011, where 2 fraud letter of undertakings were issued by the PNB branch manager in Mumbai, and these cases relate to Nirav Modi and the Gitanjali Gems case. This, according to Banking Secretary Mr. Rajiv Kumar, is a part of cleanup exercise undertaken by Punjab National Bank, and the case is currently with CBI, and about 10 Punjab National Bank officials have been suspended. According to Rajiv Kumar, the government would do whatever it takes to clean up banks and will not tolerate any fraudulent activities. He added that this is essentially a step towards rewarding the honest and putting an end to fraudulent activities.
Turning to earnings now, it was a weak third quarter for Sun Pharma, perhaps as expected, and the pharma major has seen its profits fall by a whopping 75%. Darshan Mehta is here with the key takeaways from Sun Pharma's quarterly performance. Darshan?
See, Alex, there were 2 things that impacted Sun Pharma. First of all, Taro numbers were extremely disappointing, and that impacted. And secondly, this 513 crore additional tax outgo because of the change in US tax norms. So both these things impacted Sun Pharma. But even if you adjust all this, the numbers seem to be slightly on the weaker side, coming in below the Bloomberg consensus estimates. Now, if you take a look at what happened as far as the regional moves were concerned, they were also weak because India was up almost 6%. We were expecting a higher double-digit growth that came in. US drop was as per expected, but at the higher end, we were expecting 30 to 35% drop that would come in. So that's come in at almost a 35% drop. And EM and rest of the world see 10 to 6%. growth is something that we saw. Now, more important was the management commentary. Now, there was absolutely no comment or confirmation on Halol, which is important since it's a regulatory issue at this point of time and the inspection is going on. But they have guided for a marginal miss in the revenues for FY18. Now, what had happened was they had guided from a single-digit decline. Now, the guidance has moved to almost a 14% decline in FY's 18 revenues. As far as the margins are concerned, for the second half, they believe that 20 to 22% EBITDA margins will remain. Fourth quarter will be similar to what happened in the third quarter, but they're looking at a lot of cost rationalization, which will help them maintain their margins. Now, they've dropped 9 ANDAs in this quarter due to lack of visibility, mainly on account of issues that are happening at Halol, and the R&D is currently running below the guidance of 9 to 10% of the revenues. So the numbers were weak, the management commentary was weak, and there is significant amount of uncertainty on Halol. Most of the brokerages that have come out have pointed out that at these numbers, Sun Pharma is trading at a premium valuation, which is pretty much factored into this price.
Right. Thanks so much for that, Darshan. And that's obviously a stock that we're watching today. Remember, it fell in yesterday's session about 2.8%. But let's go to the other stocks that you have to watch for in the news today. The stocks in news. Shraddha Babla has an entire list to tell you about. Morning, Shraddha.
Morning, Alex. So amongst the stocks that we're tracking is Indiabulls Real Estate. Now here, the committee has actually authorized the board has authorized the committee, to finalize options for the sale of its residential and commercial assets in Chennai, because Chennai is a non-core market for the company. Additionally, the company has also said that they aim to induct a third-party institutional investor for its commercial leasing business by March end. So we could see some developments coming in on that front as well. Torrent Power is another one. They have signed a pact with Siemens Gamesa for setting up 120 megawatt capacity wind power projects. And additionally, they've also emerged as the winner under the e-reverse auction for wind power projects, which was held by SECI. So watch out for Torrent Power. You also have Infibeam, which reported earnings post-market hours yesterday. But that apart, the board has also approved the proposal of Network 18 strategic investment in the company. Now, Network 18 will invest 40 crores in Infibeam via the issue or subscribing to fully convertible warrants, and the conversion price for the warrants has been set at 186.91. Punch Lloyd is another one. They've approved a restructuring plan and they will issue shares and bonds to certain lenders and promoters. And you could also see some reaction on the back of the earnings that they reported. That apart, you have an ET report which has said that ATC has taken Reliance Communications and its arm to the High Court to recover 101 crores. Idea Cellular is looking to raise $400 million in a QIP. Now, that's a Bloomberg report. The board approval for a QIP came in yesterday during market hours, but these are additional details that Bloomberg has shared with respect to its term sheet. So they've said that Idea has an option to boost the deal size to $546 million, and the shares will be offered in the 82.5 to 84.80 range, which is a discount of up to 2.7%. So watch out for Idea Cellular. And lastly, Safari Industries, wherein a bulk deal, Malabar India Fund bought 2.6% stake yesterday, and Ronnie Screwwala bought 1.3% stake. The stock ended 4.5% lower. So let's see what it does today, Alex.
Thanks so much for that, Shraddha. And those are the stocks that you have to watch out for. There are perhaps more that you can find on the website bloombergquint.com. Look for it under the All You Need to Know section or story. Let's turn to another story we have for you as the third quarter earnings come to an end. We're bringing you a special report on the aviation space. While Indigo and SpiceJet managed to deliver a healthy quarter, the same can't be said about Jet Airways. Soumit Sarkar has all the analysis and 5 key takeaways from the aviation earnings this quarter. Soumit?
So it's not 5, it's 4 firstly. So if you start off with the revenue per available seat kilometer, now that has increased for all the airline companies. Now the highest growth was seen by Indigo, that it is 10%, while Jet's growth remained subdued in this quarter also. It grew only 1.4% compared to the last year. But if you see that of SpiceJet, it has seen a growth trend. In the first quarter of financial year 2018, it grew by 4%, then by 7%, and in this quarter it grew by around 9%. Now this is on the back of passenger growth and because of spares. Speaking of the fare rate, if you see the average fare of the three airline companies, Indigo and SpiceJet have seen a good growth, but that of Jet Airways, if you see, it has remains again subdued. In fact, in the third quarter, it has fallen by 1.5%. Now, Indigo's average fare in the third quarter has increased by 7%. It's a lower rate when compared with the last quarter, where it grew by 11%. But that of SpiceJet, if you see, again it is shown a growth trend from 3%. The average fare has increased by 9% in this quarter. Now, if you see the cost, how they have managed their cost, the cost per available seat kilometer, which also includes the fuel cost, has increased for all the three airline companies. Now, this is mainly because of the higher fuel cost. Now, fuel cost on an average increased by 13% in the third quarter of financial year 2018. So you can clearly see here, Indigo's cost per available seat kilometer has increased by 4%, while that of Jet Group has increased by 2.6%, and SpiceJet has seen the highest increase. It has increased by around 8%. But if you remove the fuel cost and see how they have managed their cost, Jet has managed to outperform in that part. Now, the cost per available seat kilometer, excluding the fuel cost, has declined only for Jet, and you can clearly see how it has been declining for the last 5 continuous quarters, right from the third quarter of financial year 2017, where the cost per available seat kilometer, excluding fuel cost, declined by 1.7%, and in this quarter it has declined by around 2.6%, while that of Indigo and SpiceJet has increased by 2% and 4%.
Well, Sumit, maybe the fifth takeaway can be your personal experience of on-time reaching your destination, but what else do you have with regard to the market share at the end of the quarter?
If you see the market share here from the last year, that is the third quarter of financial year 2017, the smaller players like GoAir, Vistara have been able to grab some market share from the biggest player, that is Indigo. Now, Indigo last year had a market share of 41.6%, while GoAir and other players had a market share of around 8.1% and 6.8%. And in this quarter, that is the third quarter of financial year 2018, Indigo's market share has come down to around 39.5%. If you can get the next graphic, yeah, you can clearly see here Indigo's market share has come down to 39.5%, while that of GoAir has increased to 9.1%, and the other players' market share has increased to 8.2%, while that of Jet Airways, Air India and SpiceJet has remained stable at 17.2%, 13.2% and 12.8% for the December ended quarter.
Thanks so much for that report. But Sumit, you also have all the big brokerage calls for the day.
See, on the big brokerage calls, first we have is Antique on Strides Sashu. Now, they have initiated coverage on the stock with a buy rating and a target price of 970. Now, they're expecting industry-leading growth trajectory from Strides for the next 5 years because of the investments that the company has done in the last 3 years. Now, they're saying that Strides is in a good position to extract operating leverage, which will also be complemented by reduction in their leverage. Now, they're expecting its revenue to grow at a compounded annual growth rate of 20% over FY18 to FY20, and they're expecting the EBITDA margin to expand by 560 basis points to 19.8% in financial year 2020. According to the brokerage, the Australia business has multiple growth levers going forward, and the US business is at a turning point and is a prudent medium-term strategy according to the brokerage. Now, Strides is looking to divest its commodity API business, and this divestment will make the company leaner and more efficient. Now, the brokerage is expecting the company's leverage position to come down because of this divestment plans, and they're expecting the net debt to EBITDA to fall to around 1.2 times from in the next 2 years from 2.9 times currently. Also, they are saying that along with the leverage position, the company's return on equity will improve to 14% by FY20. Next, we have is brokerages on Nestle India. Now, Goldman Sachs have maintained their sell rating but have raised the target price to 5,614 from 5,485. Now, the fourth quarter of calendar year 2017, in the fourth quarter of calendar year 2017, the revenue and EBITDA were a beat according to the brokerage, and the domestic sales growth was driven mainly by higher volume growth and realization. Now, if you see Credit Suisse, it has maintained its outperform rating and also have raised the target price to 9,000 from 8,700. Now, according to the brokerage, the massive earnings beat in the fourth quarter of calendar year 2017 reaffirms their view that turnaround is gathering momentum.
Thanks so much for that, Sumit. Now, we're clearly out of time on this edition of Daybreak, but there's a lot more coming up after this very short break. Do stay tuned. Up next is all you need to know. Thanks for watching. This is Bloomberg Quint.